Good evening, everyone, and welcome to tonight's Strategy of the Week presentation for the 1st of November, 2013. Once again, my name is Jerry D'Ambrosio, and tonight's strategy presentation is titled Persistent Price and Growth Stocks. Here at VectorVest, we advocate you buy rising shares in rising industry groups and in rising markets. These are some of our core beliefs, and we truly feel that if you follow each of these beliefs, it will greatly improve your investing and trading success. Tonight, I will introduce a new search that Todd Schaefer, who's the manager of research here at VectorVest, and I developed a few months ago for the U.S. market. It works so well in the U.S. market, we decided to give it a shot here for Australia as well. I'll be introducing this new search and explaining how we're going to trade it using one of our favorite and most effective market timing signals, the RT Kicker Combo. Let's get started. From here, I'll move us into the Unisearch tool, and I'll open up the Searches, Special Searches folder, and the new search will be located in this folder. And again, it's called Persistent Price and Growth Stocks. First, let me explain the parameters of this search. First, we're looking for stock price to be greater than $5 and the average volume, 50-day moving average, to be greater than 100,000 shares. The last parameter here, it says sector not equal to market. So we just wanted to eliminate all of those major indices that you can't trade directly. Remember, one of those beliefs is that we want you to buy rising shares in rising industry groups. So the second parameter here, we're looking for stock industry group to be equal to the top 5 by relative timing. So we're not looking at the entire database of 1,700 shares. We're only focusing on the hottest industry groups at any given point in time. So these are really the high flyers. The third parameter is we want the stock comfort index to be greater than 1. Comfort index is a great indicator that measures a stock's ability to resist long or lengthy downturns. These high CI stocks exhibit tremendous price growth persistence steadily over time. So with these search parameters, we're looking for rising stocks in rising industry groups. Now, the key to any search is the sort. We're sorted by comfort index times earnings growth rate, GRT. If I go ahead and run that search and close this search directory down here, scroll us over to the left, you can see the top stocks here sorted by CI times GRT are in industry groups that are really moving up in price right now. And remember, we're not sorted by the industry RT, but you can see the top stocks here have industry relative timing rankings that are well above 1, 1.21, 1.27. If I scroll over to the right, the top stocks here, relatively good relative value numbers, good RS numbers, they're all trending up in price, favorable VST ratings, most of them, except for the top one, of course, has a buy rating. And look at these comfort index ratings. All of them are well above 1. They're all making money, and they're growing those earnings at a substantial rate. And if I scroll back a little bit over to the left, we can see that most of these top stocks are undervalued. So I said earlier that Todd and I developed this for the U.S. market, and we really felt like we were on to something. So we decided to conduct some heavy research. And as you can see from the parameters here, we're interested in buying rising shares in rising industry groups. Well, the next core philosophy, remember, we want to buy these shares in a rising market. So let me move us into a market timing graph and explain how we're going to be trading this new search. I'll come up here, click on Graphs. And again, one of our favorite and most effective market timing signals is the RT Kicker Combo. I'll put those signals on the graph. So in our trading plan, we're only going to be buying shares when a bullish signal appears in the RT Kicker Combo, anytime there's a green arrow in this market timing graph. However, we're not going to go to cash and sell all of those positions when a red arrow appears. These are high CI stocks, and these stocks are very resilient to those downturns. So what we're going to do is we're going to let our stop criteria take us out of those positions once a new downturn starts, but we're not going to replace those positions. We're going to let our portfolio extinguish naturally. And the reason why we felt we can do this is because of the nature of and the type of stocks they are. Those steadily growing, persistently rising stocks tend to not only hold their own, but sometimes actually make you money even when the market's falling. So it is a form of buy and hold. However, we're managing our positions using reasonable stop criteria and we're not replacing those positions as the market's falling. We will let our portfolio extinguish, and we'll get ready to start buying stocks again once we get new bullish signals with this market timing signal. So from here, let me move into the backtester. I can better explain this methodology within that tool. I'll come up here, click on backtester. And here we're looking at that search, persistent price and growth stocks. We're using the RT Kicker Combo timing system. We started this research on the 10th of January 2012 and we brought it all the way to current. So we're almost looking at a 2-year test bed. That's a very nice sample size to determine the efficacy of a trading system. We had 52% winning trades, an overall gain of about 45%. So we're not knocking the ball out of the park here. We're steadily growing our money consistently over time with good solid companies. It's about a 25% annualized rate of return, but the one thing that stood out to me the most here was not only are you growing your money 25% a year, but look at that drawdown over the last 2 years. It's less than 6%. If you take a look at the equity curve, very smooth, steadily rising. We had a little pullback here. Again, that drawdown was about 6%. That 6% was right about here. So we had a $33,000 portfolio value at that point in time. It went down to only about 31.5, so we didn't lose all that much, roughly about 6%. You could see here there was a period of time that we went in cash. As the market started to turn over, and I can put the RT combo timing signals on that graph, as the market started to turn over and we were receiving bearish signals, remember, we didn't replace, we let our stop criteria take us out, let our portfolio extinguish naturally, remained on the sideline for the remainder of that downturn, and then bought stocks again once a new bullish signal appeared. But take a look at this. This was a pretty significant downturn here. We had multiple red lights in the price column of the color guard that were confirmed by the RT Kicker, but our portfolio actually grew in value, holding on to those high CI growth stocks. Now we did pull back a little bit here, and we kind of held our own in this most recent downturn. Let me click on Edit and talk about the specific settings for this methodology. I'll click on Edit. Again, we're using our RT Kicker Combo timing signal to trade this methodology. Now, every one of you has the backtester. You all have the ability to perform a backtest. However, this section right here is only available if you have our Auto Tester add-on module. Auto Tester is a one-time fee. We have provided you, though, with a link in the VectorVest views to try it out for a few weeks. And if you feel that it's something that you really need to help develop a systematic trading plan, we're offering you a special discount after that 2-week trial. And you can see, you can test any of our market timing signals against any stock selection search that we have in the program. And it's a great way to help develop a trading plan. I'll click on Next. We're using persistent price and growth stocks. Here, our stop criteria, we're using a 20% gain and a 5% loss to exit positions. So we really wanted to nip our losers in the bud. We wanted to let our winners run a little bit, and we felt that a 4-to-1 profit gain to loss ratio was the most effective. If I click on More Settings, we're only going to maintain 5 positions. We will automatically replace closed positions. We will open 1 position per day until 5 positions are reached. So we're going to step in with 1 position at every bullish RT Kicker Combo up signal. If I scroll down, we won't repurchase a stock that we currently own. Since we're only looking at the top 5 industry groups, we want to limit the maximum number of stocks per industry to 2. So because our universe of stocks is limited to the top 5, we didn't want to overly weight ourselves in one industry. We could theoretically buy 5 stocks in the same industry group if those 5 stocks were the highest 5 by CI and GRT. So we wanted to diversify and only limit the number of stocks per industry to 2. Automation rules for the down. Again, we're going to take no action. So we're going to leave existing positions open until their stop criteria is met, and we're not going to open any new positions, and the same thing for the neutral signals. I'll click on Cancel. Again, pretty nice looking equity curve here. 25% annualized rate of return, a 6% drawdown. If I go to Reports and do the Situational Summary Report, there's an indicator here called the CalMAR ratio, which really is an indicator that looks at the compounded rate of return compared to your maximum drawdown. So you can almost look at it as the reward to risk profile of a trading plan, and it's almost at 4. So you have a 4-to-1 reward to risk profile here. You had 52% winning trades, you had 57% winning campaigns. The VectorVest composite annualized rate of return over this just close to 2-year time period was only up 9%. So we almost tripled what the market did over this same time period. If I close out of this report, now again, we did draw down here slightly, about 5 or 6% in May and June of 2013. We did go to cash and we sat in cash for June of 2012. Well, what I decided to do was I decided to take this methodology and pair it with one of the best shorting searches that we have in the program. And here is that run. I coupled it with Markham's short interest, and we improved our gains up to 63%. That's 10% more a year. And the great thing about this is we actually reduced our drawdown slightly, and we kept it under 6%. We didn't go to cash. We actually made some money here in May and June of 2012. Same time period here in 2013. We didn't draw down nearly as much as we did by letting our stop criteria take us out of those bullish positions and not hedging it all with short positions. And you can see the equity curve is very smooth, bottom left to upper right, continuing to hit a series of higher and higher highs, and is actually at an all-time 2-year high currently at 63%. If I go to reports, go to the situational summary report, you can see that we improved our CalMAR ratio to almost 6. So that's a 6-to-1 reward to risk profile here with this trading system. And what I've done is I've created 2 PDFs for the backtest settings here for both of these trading plans, the long only and the hedge portfolio. And we've inserted those PDF trading plan settings into the VectorVest views tonight. So just to close here, we're not trying to hit the ball out of the park with every single trade. We're not looking for triple-digit annualized rates of return. We're looking for a consistent, steadily growing methodology where we can make 25 to 35% a year with very minimal drawdown, less than 6%. Well, this concludes tonight's Strategy of the Week presentation. Have a great weekend.